Well, most of the rebound has already happened. I told you guys it was going to be a fairly quick rebound. We're already at $66,500. That's just over one weekend without the markets actually opening. Now, all of you that were fear mongering, saying this is the end of the world, the bull run is over because Iran threw some missiles at Israel, which, by the way, is every single one of them pretty much got shot down. There was no damage. So, like I said, it wasn't really an attack to actually hurt anyone or destroy anything. They basically told Israel when and where they were going to attack. So they made sure to minimize damage so Israel will not strike back. Now, based on that, unless something massive happens Monday, like Israel launches nuke or something, I think the market's going to be okay. That's why we're at 66,500. Now, I can't predict that we'll fully make a recovery to 70K because remember, it took us two dumps to actually get here. One was Iran saying that they'll do something, and two was Iran actually doing it. So we're already back around the Iran saying something dump. We recovered the last dump, but the one before it, we haven't quite recovered yet. It'll probably take us a few days, most likely, unless something else unforeseen happens, which right now, because it's unforeseen, I don't foresee it right now, obviously. So, like all of you saying it's going to take months and months to recover because there's going to be some global war and tensions are rising and all that stuff. Yeah, no, Bitcoin doesn't really seem to care about that. And yeah, your hopes for 40,000 or 50,000 are dashed. Doesn't really matter what your technical analysis or anything else says at this point. Because overall, like the momentum's definitely bullish. There's just way too much buying pressure for us to really go down that much further. Like we hit like 60K once even before this because of the Genesis dump. And now we hit about 60K again, but it bounced again, and it bounced pretty hard up this time because there wasn't, like, unlike last time, there wasn't like a continuous sale from a large source. This was just a knee-jerk reaction from people to news that, the Middle East might be going to war, which honestly shouldn't really affect Bitcoin price all that much because it is a contained regional war, but people are fearful, and when people are fearful, liquidations happen, and that's what whales take advantage of. So yeah, definitely very, very fast recovery. We'll see if we can recover all the way by like Tuesday or Wednesday. It might just happen tomorrow. We don't really know. I mean, every time it goes up, it goes by legs up of 1,000. And just like when it goes down, there are massive, massive liquidations essentially. And that just helps us bring it up much, much faster. But however, not all is happy in crypto land because just like the last couple of halvings, there might be a big liquidation after the halving, as much as $5 billion. However, it won't come all at once. It's going to be over 6 months, $5 billion over 6 months, and that is because of miners selling. And there's no specific reason this needs to happen except that they've kind of always done it after a halving. So I guess because some people want to exit the market, they want to dump some of those reserves. So Bitcoin miner selling could last for 6 months after the halving, amounting to as much as $5 billion worth. Now, this might cause the markets to go sideways for a while, like it did after the last halving. If you look at the charts for the last halving, I don't know if there was much of a post-halving dump before it went up, but there is a bit of a lag between the halving and prices going up. And obviously that's because miners are selling. However, this time is a little bit different because you have the ETFs coming in. And I think the ETFs over the 6 months after the halving should easily make up for the miner dumping and then some. Because remember, supply is going to decrease, demand's only going to increase as institutions going to come in, and I think that equilibrium will just be shattered. So there could be a large outflow of Bitcoin from miners in the months following the halving, as in previous cycles, according to a market analyst. Bitcoin miners could potentially liquidate $5 billion worth of Bitcoin after the halving, but it should not cause a gigantic dump because they're not going to liquidate all at once because you got to kind of be stupid to liquidate all at once because that would cause a massive, massive price drop and it would not it wouldn't be helpful to the people selling the Bitcoin. But it's going to come over several months, which will mitigate the effect. And with the ETF buying, it should completely negate the effect. But it might prevent us from going up too much. The overhang from the selling could last for 4 to 6 months, explaining why Bitcoin might go sideways for the next few months, as it has done following past halvings. Thean said the same could happen again with crypto markets potentially facing a significant challenge in the 6-month summer lull. I personally think we'll be fine by June or July. I think this time with the ETF buying, it'll probably counteract a lot of the selling from the miners. But, if it goes into a couple months low, I really wouldn't be all that surprised. Remember, we've never hit an all-time high before the halving. This is the first time. So if it's a little bit overbought or something like that, that's perfectly fine. I don't think that's going to prevent BlackRock from buying more. And remember, it's really BlackRock's clients that are buying more. And the institutional investors, a lot of the institutions are still just getting their paperwork done. And once they get their paperwork done, they're going to want to get in as soon as possible. Will they cause a small liquidation so they can get in? Maybe. They play these kind of games all the time, but they're not going to be able to take it down to 30,000 or 28,000. So if you're waiting for that, you basically missed the boat a long, long time ago. So yeah, whether you're buying in at 65, 66,000 right now or 70 something thousand, I think you're still going to make a lot of money once we go past 100,000, especially if you take the risk, get some altcoins, and ride the wave up on those. But right now, Bitcoin is still a really, really good option. It is the safer option, and if you're just getting into cryptos, that's probably the option I would actually go in. Miners tend to stock up on BTC, leading to a supply-demand imbalance and a subsequent rally in Bitcoin prices. But if you actually look at the miner reserves this time, they've actually been going down for a long time. So they haven't really been stocking up. Some individuals might be stocking up, and they might actually have a dump. This has already occurred with Bitcoin prices surging 74 cents in 2024 to reach an all-time high of 73,743. And miners have already been selling on that. So this effect could actually be mitigated. And some of these sales might actually contribute to the dips that we've had recently, obviously. Other altcoins in particular could bear the brunt of this situation. Many of them have been falling back heavily over the past week and may remain a long way from their peaks in 2021. And we've actually discussed this too because the ETFs don't actually affect altcoins. But right now, when Bitcoin increases, you're seeing an outsized multiple effect in altcoins. So as soon as this bull run kicks into session, we should actually see altcoins get a really, really big rise. There is actually a correlation between the halving and the altcoin rally because I think the halving is more of a psychological thing for altcoins. It doesn't really have a physical effect for altcoins, but people just think that, hey, the halving has happened. It's time to get in these altcoins so we can make our 100x. That's why they tend to pump all that much. So basically, yes, there could be some additional selling for miners after the halving because they want to unload their Bitcoin, get some profits, maybe get some costs out of the way so they can mine in the future because Bitcoin mining difficulty and Bitcoin mining rewards, well, the difficulty won't double, but the cost to mine a Bitcoin will actually double despite the same difficulty. Rewards, the rewards mining thing is a little bit imbalanced, and it has to be about 70, 80,000 for it to be profitable. And we're only about 7-8 days away, so I'm not really sure how profitable it will be in that stretch of time. So there's a lot to actually look over right now, a lot to actually wonder about right now, and just be prepared that some miners could definitely take a backseat, sell a little bit of Bitcoin after the halving. That could jam us up for 1 or 2 months after the halving. I'm going to assume the overall price is still going to be upward because I don't think the miner selling will fully counterbalance the ETF buying, especially if the institutions get their paperwork in and start buying again. But if you're wondering why there's a small lull after the halving, or even if we go down a little bit after halving, this probably contributes to a lot of the reason because, in past halvings, there has been a large chunk of money that's been distributed and sold over, 3 to 6 months after the halving. And that's why, we generally tend to go up about 3 to 6 months after each halving when we really hit that bull run. Now, generally, it is in that time frame that we hit the all-time high, but this time we've already hit the all-time high, and going into the halving, we're going to be very close or slightly over that all-time high, depending on how the next few days play out. So this is kind of a new kind of territory for us. There isn't something that kind of parallels this in the previous bull runs price-wise. So I do think you're still going to get a really, really big bull run after the halving. But if you're looking at 6x what Bitcoin is right now afterwards, I don't think you're quite going to get that because we are much, much higher. Even with BlackRock, Fidelity, and all the ETFs coming in, I would say we would at most maybe triple what we are right now, and that would be a big, big win for both Bitcoins and altcoins. And yes, the altcoins will actually catch up to Bitcoin, and Bitcoin dominance will fall. as we head into alt season. Many of you are saying like we won't have an alt season, but if you've been following the 4-year cycle, like alt season time isn't here yet. And I think alts, because they don't have that ETF, are essentially just playing by the old rulebook and the old timeline, while Bitcoin is playing by the new rulebook and new timeline because it does actually have ETFs. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.